moving now to markets, the Nigerian All Share Index closed down 0.62% to 38,090 points. Well, that's the second day of losses for the local bourse. The losers on the day included Nigerian breweries, Flour Mill, Ashaka Cement, Okomo Oil and Nestle, while some of the session's top losers include 7up, GSK, Forte Oil and Cornell. Now for an update on the Nigerian equities market, I'm now being joined in the studio by Baba Ibrahim. He's Managing Director at Main Street Bank Securities. Thank you so much, Baba, for being here. Now, it looks like the market was disappointed today. Second straight day of losses where investors, I know we had one or two earnings on tap to be released today, but nothing came out. What's the story around that? Yeah,
well, I think the market is quite expectant. We are actually waiting for GTB results. We think that, all things being equal, we should get a result out by tomorrow, next tomorrow. And that will, up the momentum of the market, But as it stands right now, the market is still, trickling on the red.
And let's look at some of the session's top gainers. We have a number of them, but I can't help homing in on Cornell again and Forte Oil. Now, both stocks from the petroleum marketing sector have recorded new year highs today. Nobody seems to be able to tell me why the stocks continue to move up, from session to session. Perhaps we can speculate, or perhaps you have some thoughts on that.
Yeah, we're all mindful of the fact that only last week or week before, the market actually realized the fact that a good chunk of the subsidy payments were released to most of the marketing firms, That's, clearly, tells us that these companies will have a lot of funds to play around with, and that obviously will increase their turnover. Don't forget the fact that most of these companies we're talking about actually are driven by turnover with small margins here and there, And for corn oil, clearly, I think that its Q1 result is quite good, and that probably suggests why it's inching up. For Forte Oil, I think probably the subsidy level that they have gotten is boosting their operation, as it were.
Now I'm also looking at the gainers table. GSK, also one of the top winners today, 350 kobo added to share volume. I thought that perhaps sentiment was still sour around GSK. Remember, of course, that's a scheme of arrangements that was suspended from the meeting yesterday. Of course, looking at minority shareholders not happy about the deal. Were you expecting the stock to go up today?
Yeah, quite frankly, I actually expected that with the fact that the parent company actually, botched the plan to increase its holding, we tend to see renewed interest and appetite in the stock. Don't forget the fact that not too long ago, the stock actually traded well over 67 naira. A lot of people actually bought around that price range, But as we speak, it closed at 850. I think that's a good pricing, and I see it going up to 60, 61, 62, given the fact that minority shareholders tend to have some respite in the fact that they still have stake in that company. If they had allowed the scheme of arrangement to have probably gone through, it means most of this holdings will have been bought over by the parent company in England, and you would probably lose out of the scheme. And I think that that probably accounts for why there's renewed interest in the stock.
Okay, let's talk about your outlook quickly now going forward. We've had 2 days of losses. Obviously, investors are waiting for more numbers to come in before they can put more money on the table. Now, we're certain that we will see some more earnings coming out tomorrow, and perhaps a direction for the market too.
Yeah, for me, my take is the fact that earnings from First Bank, Zenith, GTB will largely drive the market to probably a new level, not significantly up though, but I think the market will witness some momentum. Don't forget the fact that not too long, only last week, we saw the result of Sterling Bank in the market, and their PAT was quite phenomenal.
Yeah, but we saw the stock down today. Investors are already taking profit.
It's a general market mood. It's not really on account of the fact that the stock is not doing well. When the banking sector is not doing well, it affects the entire sector, and that's why you actually accounted for the drop in Sterling Bank. You watch it; it's going to gather momentum as we go down the line. Let's see the result of GTB come to the market with their interim posting. Let us see Zenith come into the market with their as well as First Bank. That sector will definitely hitch up.
Because I was just going to ask you that, would that be the fate of the other banks who come out? I mean, 76% growth or 97% growth in earnings for Sterling Bank. That's, like you said, phenomenal. So if we have similar numbers from Zenith, Access, or GT Bank, does that mean we're going to see the stocks also suffering the same fate? Especially, well, let me let you answer.
No, it's not like it's suffering the same fate. Okay. There's a lull in that sector, the banking sector, because a lot of people have been waiting and still waiting for the result, in particular of GTB. GTB it seems to be the rallying in terms of its policy, and then once that comes up, you can to see that most of other stocks in that sector will rally up.
Be the better for it.
Exactly. Zenith Bank in particular is what you need to put your eyes on. The fact that Sterling Bank dipped momentarily does not mean that it cause for alarm. It's really going to go up. No doubts about it.
But let's talk about Guaranty Trust Bank. Of course, market holding its breath today, waiting for those results, but nothing came out. So hopefully we might see numbers tomorrow. But in terms of interim dividend, let's speculate. Usually we see an interim dividend of 25 kobo from Guaranty Trust Bank. Yeah. Would that trend be sustained this time, or investors expecting something higher?
Well, looking at their trajectory, they've been consistently on 25 kobo interim dividend policy. I think that, well, for whatever reason, the new management probably want to just tinker with that rate a little and take it up to 30 kobo. Don't forget the fact that on the full-scale basis, they pay 165 kobo. I foresee a situation where probably they're going to leave it at that, 25 kobo.
But they can't afford more than that. Do you think that will hurt profit, or that will hurt their bottom line?
The profit showing is substantial enough to accommodate an additional increase of 30 kobo. But I think that for consistency reasons, they probably want to leave it at 25 kobo, which is quite good enough.